Hello, everybody, and welcome. I'm Ann O'Brien, the Chief Executive Officer of CFA Society San Francisco, and it is my pleasure to welcome you to our webinar, Latest Insights from Leaders in ETFs. This event was created in partnership with CFA Society San Francisco, 100 Women in Finance, Financial Women of San Francisco, and Women in ETFs. We are so fortunate to have such senior leaders sharing their expertise with us. Let me introduce our panelists. Jenny Johnson, President and Chief Executive Officer of Franklin Templeton. Julie Kane, Chief Executive Officer, Democracy Investments, LLC. Patricia Lizarraga, Managing Partner, Hipatia Capital. And our moderator is Amrita Nandakumar, President, Vidant Asset Management. With that, I'd like to turn the event over to you, Amrita. Thank you, everyone.
Thank you, Anne. Good afternoon, everyone. I'm glad you were able to join us. Let me just take a moment to recap where the ETF landscape is today. So the first ETF in the world was launched 33 years ago in Canada in 1990. 3 years later, the first ETF in the US launched, the Spider S&P 500 ETF Trust, otherwise known as SPY or SPY, in January 1993. So here we are, 30 years later. Let me share some data. According to data from ETF GI, the global ETF industry represents total assets of $10.7 trillion as of the end of August. The industry has seen net assets ranging from 500 billion to 1 trillion every year, and it's seen 52 consecutive months of inflows. Today, there are about 3,000 ETFs in the US and 9,000 globally. Those 3,000 or so ETFs in the US represent 25 to 30% of the total daily trading volume in the US. So with that background of impressive growth in mind, I think it'd be great to start with Jenny. Jenny, could you just take a few minutes to share your thoughts or your perspectives on the industry, just given your background in ETFs, and just how is Franklin Templeton thinking about ETFs today?
You know, it's funny. So Franklin Templeton's been around for over 75 years. And, we were really a mutual fund company. And I have to tell you that when I remember coming in and somebody was pitching, looking at an investment opportunity in an ETF company. And I kind of looked at it and said, why would we ever do that? Mutual fund's a better vehicle, kind of thing. And so we missed that one. And then I remember we bid on the Barclays book with iShares, and looking at what BlackRock paid for it, we thought that was crazy. And to this day, I'm like, boy, they definitely understood the vision better than we did at the time. But we then finally kind of came around. In 2013, we launched an ETF, really in response to regulatory changes that were happening to money market funds, and we were like, they could have capital requirements and things. Maybe this is a good way to experiment with ETFs. And we didn't understand at the time the whole bid-ask and capital markets component of ETFs. And so sure enough, it was a short duration product with a big spread, and it just wasn't taking off. And again, it was not understanding kind of the detailed nuances between a traditional mutual fund and an ETF. And now we've launched, and I always say to the team, we were late to the passive ETF, but we were early to the active ETF space. And so we have about 17 billion. We hired a team of experienced ETF providers and capital markets folks who really educated us on how to think about it. And initially, our distribution partners really pushed to say, from a suitability, we'd prefer you to have different products in your ETF versus your traditional mutual funds. We're now seeing that converge where they're actually okay. And then I would say that the other big inflection point in the ETF business was post 2008, where the regulatory environment was such that it pushed for more transparency around distribution fees. And when that happened, you had this huge flow of movement from financial advisors to become fee-based advisors. And the traditional mutual fund used to pay in a brokerage account, you would pay the distribution fees as part of the funds. And so when the fee-based advisor was getting paid, they didn't want to have that sort of double fee. And so there was a big push into the ETF. And I think that's when it took off. And today, I think the ETF has, it's clearly more tax efficient than a mutual fund, which is why you see in the retirement channel, there hasn't been this flight towards ETFs because the tax efficiency isn't really a big issue there. And then you saw huge growth in the ETF space in the traditional financial advisor channel. And then just my last point would be, we are now launching, we view ourselves as our expertise as our active management capability, and we want to deliver it whatever vehicle is appropriate for our clients. And we're taking some of our income fund is a 75-year-old fund, and we've now launched an ETF version. And it was really because clients said, we want to see this in the ETF version. And so we're really optimistic about more and more of our traditional products being able to deliver through the ETF wrapper.
Well, thank you for that. Thank you for that background. I think for those of us who've been in the industry for a while, we all know it's become a particularly crowded marketplace, which is why I'm finding that the stories behind the funds matter more and more. In other words, what is the inspiration for launching new ETFs? So Julie, I thought I'd start with you. What was the inspiration behind your decision to launch your ETF?
Thank you, Amrita. And I'd like to start with thanking Jenny for being here. You're such an incredible role model for me and many others. And thank you for your leadership in the ETF industry. Our strategy is very personal for me and my partners. Our chief investment officer, Chris Brown, actually spent time in Venezuela in his youth. For me, during college, I joined ROTC to join the Navy and was one of the first female helicopter pilots. I was stationed in the Philippines, where I got to fly the Navy SEALs around and the Marines, and we were preventing a suspected coup of the local government. I was recruited out of the Navy by SEI into finance, and at a young age became aware of the connections between finance, political instability, and geopolitical risk. So for 30 years, I've been watching the turmoil politically and economically. We've seen the failed states in Sudan, the recent conflicts in Ukraine, the Middle East, South China Sea. And that inspired me to start thinking about a strategy to account for these factors. So 3 years ago, my partners and I came up with the idea of using the Economist magazine Democracy Index as a proxy to account for geopolitical and sovereign risk. We think it's one of the most robust measures of democracy in the world, and we use it as a weighting factor on an all-world ex-US international index with the theory that democracies will do better over the long term. So our strategy overweights in countries such as Japan, the UK, Canada, Switzerland, Taiwan, and we underweight China, the UAE, Saudi Arabia, and Egypt. So over the last 3 years, we've been focused on building out this strategy in the ETF community, with the hopes that our theory that democracies are better at fostering economic growth. They enforce rule of law and property rights, more efficient and transparent use of capital. And so far, we've been pleased and super honored to be here today.
Thank you for that, Julie. It's your passion for the investment strategy is evident. And I know that my colleague, Patricia, is equally passionate about her investment strategy. Patricia, could you talk a little bit about the inspiration behind your ETF?
Sure. So first of all, it's so exciting to be here. Obviously, it's an honor to be with you, Jenny. And we're actually, our ETF is an investor in Franklin Resources. So we love it. And I'm really grateful to Julie for really organizing this because it's not just passion about your strategy. Just everything you do with such passion and it's great to be involved with you on so many levels. And obviously, Amrita, as our sub-advisor, we can't say better things about, because we make everything run smoothly. So thanks for having me here. So my story is also personal. The WCEO ETF is a very personal story. in the sense that it's come a long way, because I started Hypatia in 2007, and it was always about investing in women in leadership. I had an aha moment, and I was an investment banker. I had a female client who was a CEO, and I'm like, wow, I just want more of these. I want more partners. I want more clients. I want more colleagues, and I want a more balanced professional environment than you often found, 15 years ago at the top of investment banks, where it was kind of where it is today, around 15%. So went off and started my own investment boutique. And as that grew and investing in women became a thing, and we started seeing more female CEOs, I just came to the conclusion that my investment thesis is that women CEOs are going to outperform. And the reason why I believe women CEOs are going to outperform is just it's harder for them to get there. Full stop. And so the ones that do have to go through some hoops, then the ones that do not have those obstacles, they don't have to go through them. So therefore, the question is, can you isolate that female factor? Right. And I started thinking about this about 7 years ago. So it's taken us a long time to get this off the ground, but started thinking, how can we isolate that female factor? Where can I get this database? And the database of how women CEOs have performed over time does not exist. So we had to go build it from scratch. That was another thing that took a little bit of time. But when we did, we felt stronger and stronger about this investment thesis. So in January of 2023, January 9th, we launched the WCO ETF, which invests in all American public companies that have a female CEO, from small to mega cap. So you have to have $500 million market cap to be in our fund. And the way we isolate the female factor is we solve for not being industry weighted nor size weighted. So we matched it to his index from an industry perspective, right, percentage wise. And then within each of those industries, we make it equally weighted. So that for example, in tech, a large tech company will have the same weight as a small tech company, because as we know, if not, there's some other things that happen. And on the industry side, for example, there's just more women in consumer discretionary than there are in tech. So we didn't want to make it about consumer discretionary. So we did those two things. It made really all the performance about stock selection, which we all know how we're basing that stock selection. And it's a bit of fascinating to see how the markets reacted to it, how we're trying to give our message that this is about the performance come because of the additional hoops that one has to go through to get there. So we have about 130 stocks in the ETF.
Thanks for sharing, Patricia. So Jenny,
and Rita, I could go on and on about this, but we need to share that.
Well, I have to ask Jenny, as a female CEO, I'd love for you to chime in, just your thoughts about the inspirational stories behind launching funds, particularly these or any others that come to mind.
As far as what, just in general launching them, or how do we pick the thematics, or what specifically are you looking for?
Well, I guess when you're with your product team and you think about what makes sense to bring to market in a crowded space, what are sort of the drivers behind those ideas that actually make it to market, as opposed to those that just get left on the drawing board?
Sure. I mean, I always say that it's a lot easier to swim with the current. So you look for broad themes, and you try to figure out whether there's an investable way to to be able to take advantage of that theme. And so you could look at technology is the easy one, because you could look at things like AI and say blockchain, and say those are two that I think are going to be very disruptive to financial services. AI is probably easier to invest in. So we actually have a ETF that has I think it's called Intelligent Machines or something, but tries to take advantage of the AI theme. We have a genomics one. And yet, like, blockchain is actually a really important trend, but really hard to invest in. And so you have to figure out when it's investable. And then I think, to Patricia's point, there's a real push towards, I think, recognizing the value of a diverse management team and diversity of views. And sometimes just having a female CEO is representative of the culture within a firm to accept more diversity and diversity of views. And so, if you believe in that theme, that can become an investable solution. And so, our product strategy is a little bit of our own team trying to understand trends. It's never good to be the second, third, well, maybe second's okay. Third, fourth, fifth launch of a particular theme, you're not going to tend to get very many flows. And so you're trying to kind of get ahead of where the trend is going. So whether it's macroeconomic, whether it's disruption, trying to get ahead of that and then sort of testing it a bit with clients. Oftentimes, if you're early, your clients haven't caught up yet with that theme. And so it really takes an education and sort of a marketing of it. But it's hard to compete in launching the next large cap growth fund, right? So you're trying to come up with that, what's making this different with a thematic.
That's very helpful. So as we think about broad themes, to your point, one thing we're hearing a lot about lately is creativity and customization, not just in ETFs, but in the investment management industry itself. Would love to hear your thoughts on opportunities for customization, both with ETFs and with direct indexing, because lately it seems like the two are really being discussed hand in hand. Would love to hear your thoughts about that.
Yeah, one thing I always say, people ask me, well, what's changed in the 77 years, I think Franklin Templeton's been around. And I always say, well, the one thing that hasn't changed is trying to deliver great investment advice to clients. The good news is the technology's evolved such that we can actually do that better with things like customization. We can really understand clients' goals and build portfolios around that. And a big trend is, as you mentioned, direct indexing. And I think direct indexing comes out of two things. I think it does come out of this fee-based environment where I mentioned, advisors shifted from mutual funds to ETFs because the distribution fee was in mutual funds. But the other thing that happened for that advisor is when the advisor is building every month, the client sees on the portfolio that they're paying that advisor, that harder for the advisor to buy and hold a single pooled vehicle. And so they started to do these separately managed accounts. And often that was an active strategy. And now what's happening is there's a recognition, we can essentially have a passive approach, so that hence the index component. And we can use the technology to do tax optimization. And so now you're getting a passive where at the individual stock selection, you're doing tax optimization. I think it ultimately evolves to a third component, which will be impact. And you'll start to see direct indexing also not only have the tax optimization, but things like, I'm really passionate about gender equality, please tilt my index towards firms with more female CEOs, or tilt my index for those firms who have committed to net zero by 2050. So, I think that's where it's going to evolve. And then I think finally the technology is such that you'll actually take traditional active strategies, make them tax efficient using the same technology, and also overlaying, an individual's impact passion. So that's the great thing is that people will actually get their money doing for them what is really their personal passion and be able to measure those results.
Thank you. Patricia, Julie, would either of you like to chime in your thoughts about just the differentiation of strategies and just being able to provide very specific exposures, especially using ETFs as the mechanism for doing so?
Well, I mean, in the case of the WCO, we really are so focused on saying we want to deliver the performance of women CEOs. But since we have the whole database as our ETF, we also then come up with some things that may or may, that may have not been obvious, may have been intuitively, oh yeah, that's probably right. But then you actually measure them and you realize they are. So I think Jenny mentioned that it may be that women CEOs have more diversity embedded in their companies. And that's just a fact. Boards of women CEOs have approximately 40% board members that are women versus men who have approximately 30% of their boards are women. Both are pretty high, right? But when you go to the senior leadership team is where you see the drop off, right? Women CEOs on average, right? All 130 of them have leadership teams that are 35% women, There's still 65% men, but there are 35% women, which and some research studies say that's when you start getting, that's when you start getting some help. So women have 35%, and men CEOs have 20% senior leaderships that are women. So that's, that's an 80% difference. Now we're talking real differences. And that's the first one we've started talking about, but we're working with different organizations that are interested in different aspects to try to say, okay, why is it better to have more diverse CEOs? And there's this, I don't know if you read Julia Burstein's book, How Women Lead. She's some CNBC commentator, and she talked a lot about pattern matching. Right. So we really believe that pattern matching is something that if you Google CEO and it all looks one way, then that gives a board, a little bit less room to make some decisions on leadership. So we think that this is relevant in the ETF, that it lets you actually isolate this performance and other factors.
Yeah, I really love what Jenny said in the beginning about getting ahead of the curve with those unique strategies, being the first, second, or third. If you're behind that, it's too late. And you're really seeing that now coming back to the crowded space. How do we differentiate? How do we own that space with our unique stories and hold on to that?
And the great thing about finance is that there's nobody can stop your brain from having more ideas of more things to try to bring to market. I mean, that's the fun part. You can come up and you get to test them. And before, I think Julie and I have talked about this many times, it's expensive to start an ETF, but it's not as expensive as it used to be. Right? Or how difficult it would be to do a mutual fund. And as the technology that Jenny's mentioning, where you can actually do the customized indexing, as we move forward, I mean, you're constrained only by your own creativity, which is what I've always loved about the world of finance.
I love that. You're only constrained by your creativity. I'm gonna borrow that one.
Yeah.
So shifting gears for a moment, I think we'd be remiss to have Jenny on and to not talk about career paths and just opportunities in asset management, whether you're already in the industry or aspiring to be the industry. Jenny, you've been a champion for so many at your firm, but just as an inspiration to so many of us in finance. Love to hear your thoughts about what are some important things that female leaders should be doing, and if you're somebody that's trying to really move up in the industry, what are some things you should be thinking about?
Well, first of all, I'm a big believer. It's funny, when the Supreme Court came out ruling against affirmative action in colleges, there was a lot of discussion of like, are people's D&I programs dead, and how should you think about that? And, my head of D&I looked at each other and we're like, we were never doing D&I just because, for like a social justice thing. We're doing D&I because we genuinely believe that a diverse group of people are going to get better answers. And you see studies that show, I got a friend who her entire career, she has a book out called In Defense of Troublemakers. And her whole lifetime research is the fact that, just somebody playing the devil's advocate doesn't actually get you a better answer. Where you're going to get a better answer is two people who completely disagree are willing to listen to each other, and in their efforts to solve problems, they're going to come up with more and more solutions. And so you don't get that if you have a group of people who all have the same views. And diversity can be a lot of things, but obviously gender is a big portion of that, and being able to have teams that have that perspective, but you have to believe that it's good for the firm. I tell a couple of stories that I think are relevant to, if you look at venture capital money, less than 2% of VC money goes to female entrepreneurs. Women entrepreneurs who get funded have twice the return of the average venture capital fund. Only 12% of VCs are women, and 57% of the women who were turned down for their ideas by VCs said they didn't understand my idea, right? Well, chances are they were a woman pitching an idea to a group of male venture capitalists. And so my two stories that I just like to share, and I remind the team, is that One, we invested in a company, I'm sure you all know, Rent the Runway, right? And I was thinking about Rent the Runway, right? And I'm thinking about the female entrepreneur pitching it to a bunch of male VCs and saying, look, here's the thing, women can't wear the same dress to a gala or to big events because there's a lot of pressure. You have to change your dress. So this is a great idea. You can go rent a nice dress. And you're pitching it to a bunch of VCs. You're like, I've been wearing the same tuxedo for 20 years, right? It's not going to resonate. And then my other story is just a friend of mine who was starting is a Black guy who started a soul food restaurant and in Sacramento, and he wanted to do it, and I was an investor, and he wanted to do it in his childhood neighborhood, which was very poor. And I believed in him, so I invested in it, and he did really well. And I thought about it later. I thought you never would have passed an investment committee, because they would have looked at you and said, you've never run a restaurant, and two, put it in the wealthy neighborhood because people can pay more, right? I then went and he opened a second one in LA. So I go to visit it. They don't take reservations. It's 4:00 in the afternoon. There's a line out the door. I walk in and I look at him and I said, I'm the only white person here. And he said, welcome to my world. And, it's a soul food restaurant. And then his wife said to me, his most profitable items are, they have a wall of Kool-Aid machines. And I looked at her and I said, I got to ask a stupid question, do Black people just really love Kool-Aid? And she said, no, Kool-Aid was very inexpensive at the time. And these, they're coming here for nostalgic reasons. Now he's got a bunch of private equity firms trying to back him as he expands it. But imagine the lost investment opportunity if you can't relate to the opportunity. And so, look, I don't think the industry has done a very good job at cultivating, particularly women in it. And by the way, the worst thing in the world is we go and steal from our competitors, because that adds no value to the number of women in the industry. We have got to change the pipeline. We change the pipeline by articulating, and I tell the story about my daughter when I asked if she was going to follow, if any of my kids were going to follow me in the industry. And my daughter says, no, Mom, I want to do something that helps people. This is an industry that helps people. So one is, let's make sure that's resonated at college students. And two, girls tend to fall out of finance by high school. So getting involved in programs at the high school level to keep that pipeline robust is really important. And then measuring all along the way. So I think we're going to have better investment returns if we have more diverse investment teams. We've got to start this path early on at getting girls interested and diverse people interested in this business from high school and college.
Jenny, thank you for sharing your thoughts and those anecdotes. It's given us all a lot of food for thought. I know that you have to leave us early, so I want to thank you so much on behalf of the CFA Society San Francisco, Julie, Patricia, and myself. We really enjoyed having this conversation with you and learning from you. And I hope I can encourage the audience to reach out to you on LinkedIn if they have any questions.
Right. And thanks everybody for your time. And Julie and Patricia, it was great to be on the panel with you guys. I love what you're doing.
Thank you so much, Jenny. Really appreciate it. Okay. Wow, what an inspiration. I'd like to piggyback on what Jenny was saying around an industry that helps people. Because when I decided to think about getting out of the Navy, I went to a speed dating event with all different industries. And I was drawn to finance because it does make the world go around. It changes people's lives. Where else can you have huge impact? And after serving my country, I felt I couldn't just go into any industry. It had to be something else that would have impact. So I love how Jenny articulates that and inspiring young people to consider finance earlier in life. What a great inspiration.
Yeah, she is so inspiring to have heard that, and it's so important to all of us that are now well along in our careers to figure out how do we get more diversity and how do we get more women involved in the financial services industry. We're really excited. At Hypatia, we're starting a college program because we feel so strongly about this. It's called the Hypatia Investathon, and what it is we're trying to start a financial literacy program to get women, young women, which I'm sure most of us are aware, right? There's a huge wealth gap at retirement. It can be 65% between men and women. So we really think it's important to start getting women to think about investing early and starting the Roth IRA really in college when your whole financial superpower is at its highest, right? Compounding. And hopefully that will also get more of them interested in finance as an industry, because I really believe it's about creativity. I don't think it's not an industry where creativity doesn't rule. I think it's the opposite.
Yeah, and Britta, we haven't heard from you in your journey. Would you like to share what brought you into finance?
Yes, I'd be happy to. So I entered the finance industry at a very interesting time. This was in 2009. So really just a couple of months in the absolute bottom of the S&P 500. And I was just coming out of business school, and I was just really beginning to appreciate the impact of finance industry on the overall global economy. And it just seemed like a very exciting place to be. So I was fortunate to start at Vanguard, which I always say to folks that are interested in getting involved in the asset management industry. I think that starting at a large firm, which I think most of us on this panel did, is a great way just to get your sea legs, to allow you to explore a lot of different functions or a lot of different businesses very quickly, and figure out what interests you and what doesn't. And so for me personally, I figured out very, very quickly that I was fascinated by ETFs. Vanguard had launched its first ETF in 2006, so I didn't join too long after, and I was fortunate to learn about ETFs from some of the biggest and brightest people in the industry, folks that are really well known in the ETF industry now. And so that really was just a wonderful tailwind for my growth and my journey through the ETF industry. But one thing I will say about the ETF industry that I don't know is the case with other places in asset management is that it does feel just a little bit more like an even playing field. I do find that it tends to be a little bit more of a true meritocracy than perhaps other places in the asset management industry, where someone like me, a woman of color with an unusual name, was really encouraged and coached and advocated by a number of men who just saw somebody who had a passion and wanted to work hard, and through a lot of their support, was able to be where I am today. And so that's one point that I always like to make, is that especially for women, we can't be successful without the support of men, as the majority in these boardrooms or in management teams. We have to really acknowledge and be grateful for the men that are allies and that do support the journey of women through this industry.
Agreed. I can echo that without mentors of every kind in every part of my career, I would not be where I am today. And I can honestly say this was the first role I've had in my life where every job I've ever had comes into play, including my time in the Navy.
So we've been receiving great questions from the audience, and so I don't want our audience to think that we forgot about them. So I'm going to start off with a question from Paul Furman, and I will tee this up to both of you, whoever would like to jump in first. How do you measure the impact to society and the environment in your strategies? What metrics do you use, and which may drive more value or lower risk?
Thanks for the great question, Paul. So in the case of our strategy, we're using the Economist Magazine Democracy Index, and their robust methodology has 60 different indicators that roll up into themes such as electoral process and functioning of government, civil liberties. So we're using their measure of democracy to influence capital flows. And our goal is over the long term to influence countries to become more democratic, to get more capital. So our very transparent measure is through the Economist Magazine. We've outsourced that. We have an exclusive license to use their data. And democracies tend to be more ESG focused. So the second layer of impact would be democracies tend to be more focused on the environment, et cetera.
Amazing. So our impact, so as you said, we have 128 stocks in our portfolio, and that's because about 6% of women in the total public companies domain are CEOs. And we think it's going to change as we start having more holdings. So if you look at Hypatia versus traditionally versus other ETFs that have broad holdings, we have a small number of holdings vis-a-vis some of the benchmarks that we compare ourselves to, right? We track to a small cap, US small cap blend. And when you look at those US small cap blends, you get ETFs with many, many more holdings. So the way we're going to see the impact is as the world starts moving towards promoting more women up through the ranks and eventually to CEO. We don't screen for any particular ESG metric, but it just turns out that we have the most amount of globes possible in Morningstar, because in general, I think that the companies are seen in a more holistic way when they have a more diverse management team.
Oh, well, thank you for that. I feel like it's hard to avoid the topic of ESG lately, especially in ETFs. So I'd love to hear from each of you your thoughts about what ESG means to you, whether you consider your particular strategies ESG, and just your thoughts on where ESG is heading in general. You know, whether you agree with it, you don't have to share in that sense of whether you agree with it or disagree with it, but just where do you think ESG is headed, just given that it's become rather controversial lately?
Sure. So, okay, did Julie want me to start?
Oh, yeah, whatever you like.
Okay, I think that ESG is a measurement. It's not an opinion, right? In governance, do you have, boards that are elected every year? Do you have term limits? Do you have age limits? Do you have any kind of view on evaluating your directors for competencies? And that's a measurement. Same with environmental policies. Are you measuring your emissions level 1, level 2, and maybe someday level 3? And what are they? So I think ESG as a measurement is valid, because it lets different people decide what they want to do with those measurements. I think that every investor and every pool of investors can have different opinions and invest in what they want. What I think has been quite controversial, and I'm glad that we're moving away from it, is that some ESG funds really have nothing to do with ESG. And if you look at their top holdings, they're the same as the SPY for the most part. So I think that that's not really giving the investor what they're looking for. The WCO ETF is not an we're not considered an ESG stock. We're considered a thematic, and we do exactly what we say we're going to do, right? WCEO, we say we're going to invest in women CEOs, and we do that. And I think that's important for transparency to the investor. And I see ESG as a measurement metric.
Yeah, and similar to WCEO, our strategy, DMCY, is also very transparent. We do what we say we're going to do, and we're people who don't like ESG like our strategy because it's transparent, and then people who do like ESG like our strategy because we're having impact. And some of the large international ESG funds have Tencent and Alibaba in their top 10 holdings. And those are 2 tech companies that contribute to a surveillance state. So I like to say, how is that ESG? So sadly, ESG has come under criticism over the past year and a half now, I believe. And it's a symbol of the polarization of our country. It's being used politically by both sides. And while I'm sad about it, it's very well intended. And as Patricia mentioned, we've got, those who have taken advantage of it, and the greenwashing has come under scrutiny, as it should. But there are very good strategies out there, and it's not going away. Millennials are going to demand it. And I'm optimistic that over time, things will come back to the center.
No, that's helpful. And I think especially it's important when you think of ETFs to really make that distinction between ESG and thematic. So thinking about thematic investing, and especially your strategies in general, how do advisors use your strategies in their portfolios? And how do you, in general, as you're talking to advisors, how do you see them thinking about thematic investing and the role of thematics in the portfolio?
So in the case of our strategy, we're an international all-world ex-US replacement. So we're a clean lift and replace for your ACWI ex-US. Or some advisors are using us in place of their EFA and EM. Our strategy is 85% developed markets, 15% emerging markets. And in terms of thematics, I think advisors are looking for, in this time of controversy, what are stories that resonate with my clients? What can I bring to them that will help them and differentiate me in terms of advice, helping them align with their portfolio, with their values? So I think I love the use of thematics, and I think we'll be seeing more and more, as you said in the beginning, Amrita, being able to differentiate with something that's solving a need, and often it could be an unknown need, and really helping investors to align their portfolios with their values.
Yeah, I agree with that. And I think that in general, there's a big, there's not a single wealth management firm that doesn't have a women in wealth office, right? Because we're all quite aware of the huge transfer of wealth that's going to happen in this decade because of the baby boomers. Women are going to start controlling 2/3 of the investable assets. And so the wealth management firms are very, very interested in this, and how do they get the biggest piece of that pie? And so what we're saying is the WCO is a US small cap blend, but what we're trying to say is use this to talk about things that your client wants to talk about, right? So few people have heard about the WCO ETF or any of the small thematics because of the way the industry is set up. But when you can bring something to the table that you think your client's going to want to talk about, then you have a more meaningful discussion. So we're reaching out to advisors on that basis, right? Saying, is this something that's going to bring you close? Is it having a conversation about this particular subject going to bring you into a more meaningful discussion with your client? And I think that thematics do serve that role in opening up and making the conversations more than just the graphs and charts that you're being shown in a quarterly basis, or however often you meet with your advisor. That's on one level. On the other level, I think it's hard to understand how I actually do think I agree with what you're saying, Amrita, about thematics being what differentiates you, but I'm not sure how it enters into the whole pie in terms of how investors, how people who are investing through an advisor get the right, get kind of a bigger selection of performing assets.
Yeah, I think it goes back to in some ways with thematics is, I think it opens up broader questions, and I wish we had time to talk about all of it, just broader questions about when people are people really, when they talk about voting with your wallet, right? Does that apply to investing as well? And the role of the thematic is as a way to express your belief. Are you really going to express your views that aggressively through your investment portfolio, or are you going to first pursue other outlets? And I always it's a conversation I always enjoy having. Maybe we can just end with that as one last question. Patricia, Julie, if either of you had thoughts around that.
Sorry, what was the question?
It's just, what is the role of the thematic, right? As how do you think about expressing views in your portfolio, right? If you start with 60-40, how can you integrate thematics to express, and make, going back to the customization question, creating some customization of your portfolio through the use of thematics, right? So I'm sure thinking about DMCY, people who are just as passionate about investing in democracies, and how that could play a role in the portfolio.
Yes, absolutely. And, in some cases, maybe there are portfolios who have home country bias. They've been nervous to be an international at all because they're worried about various geopolitical risks. So some case we can add to the diversification of a portfolio that has not been comfortable doing international because of those reasons. Or like I said earlier, where we align very cleanly with an all-world ex-US strategy. We're in 2,800 international equities, large cap, mid cap, and so advisors can use us in their international sleeve quite easily, and align with your wallet. align your values with your wallet.
I think the world is moving towards thinking about how you spend each of your dollars and where you're putting it. I don't think we're going to go from 0 to 100, but I do think that that there's significant research that says that female investors care a little bit more about what's in their portfolio from a what am I investing in perspective. And I think that the large wealth management firms are very much taking that into account, given this transfer of wealth that McKinsey's telling us about. Well, not just McKinsey, there's tons of studies. So I think that we're going to be hearing more and more about it, but I'm curious with you, Amrita, to see, is that actually going to pan out in flows?
I agree. You know, as a sub-advisor to nearly 70 US listed ETFs, you know, we have the opportunity and the privilege to work with so many interesting issuers, including individuals like Julie and Patricia. And, you know, the truth is I'd love to work with everyone. But we do have to be thoughtful about who we partner with, because you know, we have to think about what is the investment opportunity, or what is the gap that this particular strategy is filling in an otherwise crowded marketplace. And one of the things that we see is that themes that are thoughtful, that come from a place of people are asking for this, i.e. the ability to invest in democracies, or the ability to invest in females leadership, particularly female CEOs. You know, myself and my colleagues, we saw that there was a need for this. We believed when Julie and Patricia told us that there was a need for this. Where I tend to get skeptical is what I like to call kind of the fads, where it's just could really be a passing fancy. You know, for those of you that are familiar with the ETF industry, there are all kinds of really, really interesting ETFs out there. There's one that tracks the performance of companies that are involved with the Korean pop music industry. There are ETFs that purport to follow the holdings of certain members of Congress. And so that's where those are ones where we pause and we say, okay, is this really just a passing fad, or is this really fulfilling a true investment need, or really allowing people to express a particular view? That's where we tend to be more skeptical. So I think sometimes the thematic pie is getting a little too finely sliced and diced, and that's where our firm personally, we tend to shy away from those types of strategies.
Understood.
Well, I appreciate you all allowing me to ask a lot of great questions of our panelists, but I do want to make sure our panelists have an opportunity to share any final thoughts that they may have with all of us. Julie, would you like to start?
Oh, thanks everyone for being here. Huge thank you to Jenny for honoring us with her wisdom. What an inspiration, what a role model. And coming back to what Amrita said about the ETF space, it really is one of the best spots in financial services. Everyone is super friendly and helpful. I encourage everyone to look at new and different strategies that trigger your fancy, that align with your values, and help spread the word for the new brands that are trying to make their way in the world.
I couldn't have said it better. I want to also thank Anne for really putting this all together as well. And it's been it's just something both I think Julie and Rita and I feel so passionate about. And thank you so much for the opportunity to share our stories and hopefully get all of us thinking about what we're doing with our own portfolios and those we manage.
Thank you all. It's wonderful to hear your impressions. Thank you to Jenny and Abstentia, Patricia, Julie, Amrita. Having thought leaders and innovators like you willing to share your thoughts and ideas with everyone at the CFA Society, 100 Women in Finance, Financial Women of SF, and Women in ETFs is really valuable for our members. So we thank you so much and hope we'll be able to welcome you to another event that we can co-produce in the very near future. Thank you so much. Have a great rest of your day.